Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another Velocity Banking review. And guess what? YouTube has let us know that we're crushing it. We've racked up over 50,000 hours of watch time. It says keep up the awesome work. So if you do the math, that's over 5.7 years of watch time. And this channel is only about a year and a half old. So I know that you're all addicted to that velocity banking. It's your crack. And you know what? I am your velocity banking crack dealer. So I'm going to make another video so we can make this 50,000 hour watch time go up and we can bring in that ad revenue money. And if you don't know anything about this channel, we make about 300 to 500 a month. So if I take a look at the estimated revenue here, you see $322 in the last 28 days, and I get a little sweet paycheck on I think like the 21st of each month. Get a little bit of extra play money for teaching velocity banking and making you all velocity banking addicts. So here's the thing. I'm gonna have to keep dealing the velocity banking crack. So I just gonna do the same video as last time, right? So what is velocity banking? All it is a debt payoff strategy using a line of credit as your main operating account, line of credit, right? So there's only two requirements to it. Number one is a budget, so income, expenses, leftover savings, and then our expense breakdown. So we have one, two, three, four, five credit cards, two auto loans, a student loan, a mortgage, and we have our non-debt expenses, so $2,000. And so what we're going to do is use our line of credit to help us pay it all off, right? So what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and use it over and over again. That's all a line of credit is. A credit card's a line of credit. Um, a personal line of credit is a line of credit. A business line of credit is a line of credit. A home equity line of credit is a line of credit. You ever notice that the line of credit has the term line of credit in it? Like literally, it has the word line of credit in their names, but except for the credit card, but still a line of credit. Okay. Now, I know what some of you are thinking. Okay. And you say this to me all the time. Where do you get one? You get it from a credit union or a bank. You just kind of do some Google searches. But here's the most important thing, okay? Banks don't lend money to people who need it. So if you're in this situation where you're making 8,500 a month and our savings is only $160, it's like, we're kind of ooh, we go to a bank, they'll be like, "Huh, you need money if you have $164 left over." And then they'll deny you, right? So the thing about credit products is we have to get them before we ever need them, right? And I have over $575,000 in lines of credit, $575,000. And look, my home equity line of credit is $280,000. My home equity line of credit is $280,000. See how awesome that is? $280,000. But in total, I have 575,000. In fact, I probably get to a point where I won't even remember. I was like, how much do I have? What, a million? It'll probably be like in a couple of years, I'll get $1 million in lines of credit. But let's just keep going. Okay. So we're gonna have the same income when we do velocity banking, same income. Okay. And then same expenses. But here's the thing that a lot of people have trouble with, right? They're not gonna have any savings. Okay. We're not gonna have any savings, but we're going to put our money into debt with the help of a line of credit, right? So let me just go ahead and do this. And let's just assume we have a $115,000 home equity line of credit available, right? Home equity line of credit. And what we're going to do is move some of our debts in a certain order, right? We're going to make sure that we move the usually high interest rate credit cards and short term loans into the line of credit to give us the maximum amount of cash flow. And we're going to do this with, let's say, 5 credit cards. Let's go ahead and do that. And we're going to move it here. And that is going to be how much? I think 114,000 if I'm not mistaken. Let's just do the math. 27 plus 30 plus 10 plus 35 plus 12, $114,000 of debt. Okay. Now, what happens when we just do the debt transfer? Well, all these payments go to zero. Okay. Whoopsie, not the auto loan, right? We'll wait on that one. All the payments go to zero. And then this is the final step of Velocity Banking, we're going to make our line of credit as our main operating account. That's what we're going to do. Line of credit as our main operating account. So what this means is we're going to put our entire paycheck into that line of credit and then take our expenses out of it. And so this is going to do two things. Number one, it's going to satisfy the minimum monthly payment, right? So it's not really really expense except for the interest portion. And then number two, it's going to minimize the interest because the interest is based on the average daily balance. So when you put all of your money into the line of credit, okay, it's going to be at its the balance is going to be at its minimum, and then you take out the expenses from the line of credit afterwards. Okay, so let's go ahead and do the math. We're going to do this, and then we're going to do the next month's balance. So to get the next month's balance, it's the previous month's balance and the interest minus our cash flow. So 3775.8. So what does that mean? We put the $8,500 into the line of credit. We take out $4,724 out of the line of credit. And then after every single month, the balance is going to go down by this cash flow number plus the interest, right? So let's go ahead and calculate the interest. Again, this is based on the average daily balance. Multiply by the interest rate, 0.08, and then you divide by 12. So the 8% is the annual interest rate, and the way that they calculate it is they get it multiplied by the average balance and then divided by 12, right? Because it's calculated monthly. Okay, and then what you do is you just copy and paste, and then Control V. And then as you can see here, right, 34 months, in less than 3 years, we paid off the debt, the $114,000. So that was really easy, right? So 34 months is 114K. And I don't know about you, but are you getting a little bit high from this debt payoff? And, if you've dealt with like drug addiction and, it's a serious thing for you, please understand, I'm just being lighthearted about it. But I'm getting a little high from this, right? A little debt payoff high. Doesn't it feel good? Because we were struggling. We were in the struggle bus, $164.97. Okay, $164.97. And then in day one, we increased it to $3,775.80. Look how easy that was. Okay, so next thing is the auto loans. Okay, so what we do is we have a loan calculator right here after 34 months, right? So 34, we just put in the current balance. We have a way to calculate that with this loan calculator. And so what we do is we sum up these two, the G2, G3. So it's about 22 grand is the two car loans, right? And what we're going to do is move it to line of credit, and then these payments will go to zero, and we just do the exact same thing. So let's go ahead and do that. All right, so scroll all the way down, and then plus 22142.44. And then, all right, this is what we're going to do. These two go to 0, 0, 0. And then now the cash flow is $4,687.52. Okay. And now what we do is we just update the cash flow. Look how easy that is. That is so easy. Okay. All right. So now this is going to be 4687.52. And then I'm going to copy and paste this, and look how long it took us to pay off the cars. When we focus on paying it off, it's 1, 2, 3, 4, 5 months, right? 5 months for 2 cars, not that bad. And so now, I think this is 39 months, if I recall correctly. Yep, 39 months. So a little bit more than 3 years. 39 months. So 114 plus 25 plus 22. 161K, right? 161K. And then now it's our student loan. I'm getting a high like twice already. So once when we paid off the credit cards, twice when we paid off the auto loans. But it's a good type of high. It's the type of high when you're like, ooh, just paid off the debt. You got a big relief on your shoulders, right? We're not actually doing crack. I'm sorry. We're not. We're not like the I don't want to say, who we're like, but remember that big organization that sold crack in the streets in Los Angeles to pay for wars in Central America? You know who I'm talking about, right? Okay. So we're not like them. Okay. So just want to make that clear. Anyways, all right. So now we go to 39 months. So this is 0, this is 0, 39 months. And then now we have $40,000 in our student loan. Again, let's go ahead and move this right here. Go ahead and do this, and then do this, and plus 40642.1. Okay. And so now let's go ahead and do this. And actually, I forgot to increase the cash flow. So this is going to be 0. And now our cash flow is 5,300.9. Okay. So 5,300.9. And then in 47 months, it's all paid off. That's another hit right there. Okay. That's another feel good moment. So 47, was that 47 months? Let me scroll down here. 47 months, right? 47 months. Okay. And then so it's 55 plus 161. So 216K. And then mortgage $200,000 at 47 months. All right, let's do this. 47, $189,000. And let me go ahead and do this. All right, so let me go ahead and open up the Velocity Banking calculator and then plug in the numbers. Okay, so we're gonna, all right, so we've already put the numbers in. Look how easy that is. You just plug and play. It says 2.7 years right here. And where did I learn these awesome strategies from? Not just Velocity Banking, but financial literacy, real estate investing. I learned it from Renatus. Okay, so Renatus. And so if you're interested in upping up your game in addition to Velocity Banking, go ahead and click the Google form link below. Okay, so quick plug for that. Make commission off of reselling their product. Yeah, and I know people hate the commission world, but it's true. It's true. Anyways, so now we paid only 16 grand of interest? Whoa, no way. My mind is blown. Is this right? Am I doing things right? 8,500. That's insane. Okay. Who pays off a mortgage into 3 years like that? Oh wait, I do. 2.7 years. Okay. So, 47 plus divide by 12 plus 2.7, screwed up. And that's 6.6 years debt free, right? And then I'm excited, right? I'm like Jessie Spano in Saved by the Bell. Remember when she was like on study meds? We're kind of like that, if you know what I'm talking about. And then she ruined her career by doing that awful movie, Showgirls. And I actually watched that movie a couple of days ago because I was just like curious, how did Elizabeth Berkley ruin her career? And I was like, oh, I get it. I get it. But it was like so bad it was kind of funny, but you shouldn't watch that movie. Anyways, yeah. So 6.6 years. And also if you're a child, don't watch it. It's rated NC-17. Bad, bad. Okay. So 6.6 years debt free, right? And how much is that? It's 216 plus 200. That's 416K. And we're debt free, 416K. Can you believe it? Can you believe it? Oh my goodness. I cannot believe it, right? And then now, after every single month, we have $6,500 freed up, and it's so simple. It is so simple. Okay. All right. Well, hopefully you got a sense of relief, we'll use that word, after watching this video about how easy it is to pay off debt using Velocity Banking, right? Disclaimer, no one's actually dealing any drugs here. We're just making addictive, I don't want to say viral because none of my content has gotten viral, to be honest. My highest video count is about 30,000, but in terms of watch time, 50,000 hours. Let's make it go to 100,000 people. Share the content, right? In the comments, what should we say? I am the goat of debt payoff. Let's do it that way. Say I am the goat of debt payoff if you're watched all the way to the end, right? Because I know you're going to do it. I know you will, right? All right. Well, this is Korean Atlanta Mentorship. Have a great day, everybody, and we will speak next time. Debt relief. Feel good, right? Have a great day.